Hey everyone, my name is Peter. I'm a passionate wealth builder. I use stock options and properties as my investment vehicles, and I document one of my option trades every single day. So today is my trade number 204, and I traded once again American Airlines. So if we zoom in, we can see that earlier this week the price went up, and then it went back down again, and I actually took advantage of that. So when the price was lower, then I sold the put option, and then when it bounced back up, then I closed that for a little profit. And the reason why I closed it for a little profit is exactly what happened today. So as we can see, the price came back down and it went below $13 today. So it basically, by me closing the previous deal earlier this week for a smaller profit, enabled me to open an even better trade. So this time I sold the $13 put option expiring in January. So if we take a look at the option chain, we can see that the earnings is on the 19th of January, so we have to be very mindful of it. Hopefully, I'll be able to close this deal way before then. So I traded the January 20th expiration and the $13 put option. As we can see, it's currently trading between 78 and 81. I received I received 80 cents for this particular trade. So what I'm hoping for is that the price is going to bounce back up, and that will enable me to close it. Just to for those of you who are new to option trading or the concept of stock options, when you sell a put option, then what you are hoping for is that the stock price going to go up and will remain above your strike price. So my strike price is $13, and what I'm hoping for is that the price is going to go back up. As we can see in the last several weeks, it has been more around the $14 mark. So there is a fairly good probability that this trade is going to work out. So let's hope for the best. Now, the other trades that I did today, they were quite interesting. I actually had to make adjustments to. So these are not new trades. These are adjustments. So once again, I document one of my trades every single day, but I do document all of my roles. So this is where you can see where that I rolled. This was my IWM. So if we have a look at what happened in IWM, the price dropped quite a fair bit today, and I needed to make adjustments. So this is where you can see the orange line indicating my call position and the green line indicating my put position. So the objective of this, I mean, I've been rolling this position since 24th of May, so quite some time, and I have the intention to keep rolling it pretty much forever. The intention is to keep growing this dotted line, which shows my premium. So at the moment, it's looking quite positive. But if there is going to be a massive movement in the price, then obviously I will have to sacrifice some of my premium to keep my hopes alive and keep growing my overall premium in this trade. So as we can see, the price went down, so I just needed to make an adjustment on my call option. So the way it works is that if the price goes down, then I am winning on the call side and I'm losing on the put side. So I take advantage of the winning side by rolling it down a little bit. So in this instance, I rolled it down from 195 to 190, and I received an additional 46 cents credit. in dollar terms, it's 46 additional dollars because you need to multiply by 100. So that's what I did with IWM, and I did exactly the same with with my SPY position. So once again, this is a long-term strategy. So I started on the 20th of May, and we can see a fairly similar chart. The initial growth was quite substantial because of the drop in volatility, and because the price came back down today quite a fair bit, I needed to make an adjustment on my call side. And the same thing happened with my QQQ position, which is the technology ETF. The price came back down, so I just adjusted my call side. And once again, what I'm hoping is that this dotted line going to keep going up in the long run. So for example, the SPY, just in case you're wondering, what does it mean to have, let's say, $2,000 premium? Well, this particular trade, so selling a call option and a put option, in other words, a strangle against the SPY, requires about $8,000. So obviously it fluctuates depending on the market conditions. Sometimes it's more around the $7,000. Other times it's around the $8,000 mark. But I still have, so now it's mid-December, so I still have 6 more months to trade. So in 6 months, I was able to collect about $2,000 of premium. So if everything goes all right and everything goes according to the plans, there is a possibility that I may collect an additional $1,500 or even as much as $2,000 of premium, which would mean that I invested $8,000 into this particular strategy and produced about 50% return on it, which is pretty awesome. I would sign up for it any day. And also it's a relatively low risk strategy, given that SPY covers the 500 largest companies. So these are the trades that I did today. You can see the documentation here. If you go onto my website, diakonitos.com, community/market comments, and you can find every single documented trade in here. As you can see, I am recording every single adjustment that I make so that you can keep track of it and you can learn from it. You can see why I made the adjustments, how I made the adjustments, and I suggest that you go ahead, if you don't have the funds at this stage to do options trading, you would need about 2,000 USD to start with. That's the absolute minimum. Then I suggest that you just do your paper trading. Just have a spreadsheet and start trading. You can record my moves and you can start learning about options trading that way. So have a great day, everyone. I hope you find this useful, and please hit the like button and subscribe and spread the word. Thank you for watching. Have a great one.